Shery, what do we know about this increase in cases?
Yeah, we have seen 61 reported new cases in China, 41 of them coming in Xinjiang province. And remember, this is the province under the limelight because of China's treatment of Muslim Uyghurs. Now, we're also talking about infections centered around the city of Dalian, and those infections really spreading to other parts of China, including northeast provinces as well as the southern province of Fujian. It's really like authorities are playing a game of whack-a-mole with the virus, because every time they feel like they have contained the virus, and we're talking about 80,000 plus infections up until March, we're seeing this resurgence in cases. And not only in the mainland, Hong Kong reporting 142 new cases, the sixth consecutive day of cases remaining above that 100 threshold. They had to ban all indoor dining, complacency leaving Hong Kong a little bit low on defenses as well.
And the market reaction on the back of this, Shery?
Markets ended up the session mixed last night, but it was interesting to see how the Japanese yen did break that 106 psychological level. Of course, we're talking about the strongest level against the US dollar since March, and not only because of risk-off sentiment, because of this resurgence of the virus, but also broad dollar weakness as we continue to see. This would usually be negative for Japanese stocks, but we have seen the topics reverse earlier losses. There was speculation that the Bank of Japan was potentially buying in the markets. You're taking a look at the ASX 200 right now, and that's because we're headed towards Australian earnings season. It will be a messy one. We're talking about the economy being in a recession for the first time in 3 decades. So we're seeing forecast earnings for the ASX 200 falling about 21% this year, outpacing the 16% cuts that we have seen for the broader MSCI Asia Pacific Index. Also, the bright spot, though, for Asia might be those Chinese tech stocks. We're talking about the Hang Seng Tech Index that launched this week. We're talking about an index that tracks the largest 30 tech companies in China. This GTV chart on the Bloomberg showing you the CraneShares CSI China Internet ETF here in the U.S. because the components look pretty similar. So what this means is that if investors have been invested in the Hang Seng Tech Index, which includes Tencent, Alibaba, Meituan, they would have potentially gotten 44% in returns versus a 13% loss for the broader Hang Seng Index.